Everyone heard about popular chart patterns like head and shoulders, double bottoms, and flags. You've probably seen traders marking this on their charts expecting a big move, but there is the harsh reality. Trading based solely on these patterns means you are following the crowd, and in the financial markets the crowd rarely wins. Why? Because the market is designed to favor large players, the institutions, the whales who make money by moving against the crowd. Chart patterns might seem like a clear signal, but the more people spot and trade them, the more likely it's that big players will take advantage of this predictability, moving the market in the opposite direction. That's how the game works, and it's why retail traders often lose. If you are tired of following the crowd and want to trade like a pros, join my Telegram channel. I share exclusive entry points in promising projects. We recently made solid profit on Ethereum and XVG trades. Don't miss out on these kind of opportunities. Join now. Chart patterns are everywhere, from trading books to YouTube tutorials. Everyone is preaching the same message. Look for the head and shoulders or wait for a double bottom. But here is the thing, they don't work as standalone strategies. Why? Because patterns are just reflections of past price action, and markets don't move in the predictable patterns forever. The psychology of the masses is one major reason patterns fail. When a pattern becomes well known, everyone starts trading in the same way. And when everyone is buying or selling based on the same signal, the market often moves in the opposite direction. It's a self-fulfilling trap where retail traders get caught off guard, while the big players who know how the crowd will react step in and take advantage. Another issue is that patterns lack context. They are just one small piece of the puzzle. When you focus solely on patterns, you are ignoring the bigger picture: market sentiment, order flow, institutional movements, and even economic news. Patterns are a simplified view of complex market mechanics, and that's why they don't hold up in real-world trading. Large institutional players don't trade based on the same patterns retail traders do. They operate on a different level entirely. These big players use advanced algorithms, deep liquidity pools, and insider knowledge to move the market. They aren't looking at simple patterns like a retail trader might. They are focusing on supply and demand zones, large orders, and real-time data that we don't have access to. In fact, institutions exploit common patterns. When they see a large number of retail traders buying or selling based on a certain information, they will often trade in the opposite direction. If everyone is buying after a breakout from a double bottom, for example, the big players might sell into that buying pressure, causing the price to reverse and trapping retail traders in losing position. Patterns like the head and shoulders or double tops are not strategies. They are just a small, isolated part of the bigger picture. Trading them blindly without considering the broader market context is a recipe for failure. For example, you might spot a textbook head and shoulders pattern, but what stage is the market in? Is it a trading market or a ranging market? Are there signals of institutional involvement? Is there a major news affecting the asset you are trading? These are the questions that truly matter. A pattern might show you part of the story, but without the full context, it's not enough to make a profitable decision. What to conclude? Patterns can be one argument in your decision-making process, but they should never be treated as standalone strategies. To succeed in trading, you must factor in the bigger picture: market strategies, trends, institutional activity, and the overall sentiment. Relying solely on patterns is like trying to predict the weather by looking at a single cloud. It's not enough. So relying solely on patterns is like trying to predict the weather by looking at a single cloud. It's not enough. So instead of following the crowd and trading patterns like everyone else, focus on learning how the markets really move. Understand where the big players are, analyze institutional footprints, and use that to your advantage. For real strategies to not follow the crowd, join my Telegram channel. We don't trade patterns like the masses. We look for institutional movements and capitalize on them. With real market insights and well-timed entry points, you can finally start trading like a professional. Join now and start making smarter trades. See you soon.